The topic for this panel discussion is the future of central bank digital currencies or CBDCs. So for the sake of this panel, we will call it as CBDCs itself. Let's begin with the basic question that I have in mind. So let me first of all introduce the panel. We have with us Satvik from UnoCoin. You just raise your hand. We have Shonak from Outlier Ventures. Then we have Aishwari Gupta from Polygon Labs. So the first question is, how do CBDC differ from fiat currencies and cryptos, and what advantages do they bring to the whole financial system?
What CBDC is essentially is called digital cash. What you exactly have currently sitting in your wallet is cash. That is guaranteed by the RBI that it is going to hold, a 100 rupee note is going to hold 100 rupee of value no matter what. It is guaranteed by the RBI. Now, you might think, what's the difference between your money in your bank account or UPI? That comes under digital money issued by commercial banks. That is not completely guaranteed. That is guaranteed up to 5 lakh rupees under depositor's insurance. So, when we are doing certain transactions using our cash in a wallet, there is a level of anonymity. There is no government oversight. When I'm paying someone 500 rupee, the government is not looking at that transaction. But when I'm probably paying more than like 2 lakh or something, then there's KYC requirements and things like that. Similarly, CBDCs have a wallet system. It's just in a digital form. All the denominations follow the same denominations as your currency right now. And you're able to transact with anyone. As long as it is small amounts, there is a level of privacy. As soon as those are larger amounts, then the KYC requirements again kick in, and there's going to be government oversight.
Okay.
But coming to the other part of the question, how is it different from cryptocurrency? Cryptocurrencies give you a level of anonymity and sometimes privacy. There's a very big difference there. Anonymity means there's absolutely no way to trace you and no way of like figuring out who you are and who you're transacting with. Privacy means certain parties will be able to view it. That's like the main distinction. But cryptocurrencies usually are decentralized and CBDCs are completely governed by RBI. And if you're deferring it from money, it's just that banks are not involved.
I just wanted to add a little bit more to what Shonak has already added. When you look at money, right, the money which is in your bank account, like you already said, like this is something where you have the CRR reserve that is with the RBI, but the money that is issued or that is given out by the bank is always credit created, right? And the point of differentiation between both of them is RBI, when they're giving it to you, it is 100% backed by, that amount is 100% backed. However, like if your money is in a bank account, it has 5 lakh. From a cryptocurrency perspective, a lot of stable coins try to imitate currencies. And even they, like if you look at the majority one, like the stable coin market today is around $224 billion. Mostly all that money, so the way it is issued, it is just replicating your dollars. The major two of them are basically just replicating dollars. The money that is there is also a loan. The stable coins that you have are a loan. They are not actually backed by the government. It's basically the money is inside a company against which there is a loan that has been drawn out, and that loan is given out to you in the form of stable coins. So the level of backing from the government side is tremendously low. If tomorrow the issuers like Circle, Tether go down, there is a fair chance you will not get your money back.
Satvik, thoughts?
Yeah, I pretty much agree with it. So, to me, let's say we have a company like Paytm, right? So, if Paytm is owned by RBI, like how you would feel about the transactions and do it, right? So, it's kind of that's what is more CBDC. And then when we see about the fiat currencies, it's what the central banks issues, so which is the the currency notes and coins, and then whichever can be deposited in the bank, and then be able to do the transactions. But on the other side, the crypto is entirely different. So it is completely decentralized in nature, and generally the central banks have nothing to do about it, and it is run by the people who trust in that particular system, and the cryptos is much more global in nature as compared to CBDs and fiat.
Sure. Thanks. So, I believe CBDCs was launched in India in December 1st, 2022, right? So since launch, the adoption rate seems to be extremely low, right? So why is it extremely low? With many countries are experimenting. So how do you think India's approach compares with the other countries like?
Okay, so see, when it comes to any new technologies, I think when it comes to India, the initial adoption is very slow. It has the same sense, the introduction of internet, which took extra 5 years as compared to developed countries, to maybe the payment gateways where people can pay it on the internet, etc. And even when the NEFT and RTGS was introduced, right? So, and it is similar to this CBDC that we're talking about as well. But when it comes to CBDC, I think there is more friction as compared to other things, which is just pure technology, right? So one is, there are many countries which actually are not at all in favor of CBDC already, and generally India has taken the view that it's very conservative view, like how it works in other countries and how we will be able to replicate this whichever is successful. So that is on one side. But on the other side, if these kind of CBDCs really become famous, like how UPI works today, then you're essentially removing a big portion of what the banks do. So which is helping people do the kind of transactions. So it is actually very tricky because the banking sector is extremely huge in India. So there is kind of a little bit of, a competitive friction that already exists between the Reserve Bank of India and the banks, which is not supposed to be there. It's supposed to be, okay, these are regulated and they're the regulator. But instead of that, now both are competing for something similar, for doing the transactions and acquiring the data and such. So now what has really happened is the RBI is now pushing the banks to have their own apps to support, these kinds of CBDCs. It's kind of, I would not really call it a CBDC anymore, because like, what does bank to do in between, right? So, but I think they'll eventually figure out the exact, status quo in which it'll really boost and adopt together, I guess. So we are on the journey of identifying how exactly it should work for a country like India.
Shonak, your views?
Okay, so to add to that point, CBDCs, as it was imagined, was supposed to have like this onboarding funnel that people who are unbanked would be able to get CBDC wallets. But now the reality of the situation is, if you do not have a mobile number and a bank account, you cannot get a CBDC wallet. CBDCs are competing with the banking system. But the government has taken a view that the onboarding needs to happen through banks. Now, why would the banks want to enable something that is competing with them? So essentially, you download any of the CBDC apps, e-Rupee apps that are available. I don't think you would be able to get across the login screen. I don't think it has ever worked for me personally. And the funny thing is, I know a lot of people who are working on CBDCs and they themselves have never used it. So if in this room most people don't know about it, that's because even the people who are building it don't really know what it's about. Also, you stepped upon how our approach is different from other countries.
Yes.
So if you're looking at the whole CBDC landscape, the most advanced one is the digital yuan, the Chinese one. They are taking a very different approach, where they're not going for retail CBDC or wholesale CBDCs. They are specially building it towards their Silk Road initiative, where it's going to be used more for cross-border payments.
Makes sense. Japanese are always advanced. Chinese.
I think, so let's break it a little bit more into deep dive into it. I personally have been working on CBDCs for almost 8 months now. So the way CBDCs kind of work, and in their current form, why they're not getting the adoption, I kind of can go out and do that as well. Before that, like when we look at UPI, right, one of the questions, and if you look at the total economy of India going out, and one of the questions that I ask everyone, did UPI actually build a new economy? And most certainly the answer is no, because your average size of UPI transaction is still between 30 to 50 rupees, which is you buying a cigarette, you paying for your coffee or chai at a tapri, right? So that actually did not create a new economy. What it did was, it just brought the existing economy, which was cash based, into the total economy of GDP of India. However, the way CBDC should function, I'm not saying they're functioning right now, should function is CBDCs have the potential to unlock an entire new economy, which the current banking system cannot cater to. And that is a powerful statement, because if you look at the CBDCs across the world, nobody has been able to kind of go to that level to crack it out. And even India, like I think the CBDC started with Project Vajra back in 2017. So I think like this is before even like I entered into the crypto market. So almost 7-8 years and everything like that into the building. Now why, or what is the biggest challenge in the current CBDC structure is, when you look at blockchains, CBDC is a byproduct of a blockchain kind of production. Blockchains essentially say that you can go out and make the delivery of a product at the same leg, which is also known as delivery versus payment, PVP, payment versus payment. What that means is, today, if you look at the global context, around $7 trillion moves every day, retail, global, and everything like that. Out of that, only 32% of the money is insured, which means that there is a chance, and this has happened multiple times. 2008, when the market sank down, there were a couple of banks who essentially had received one leg of the currency, but because the other leg had to go out and this became insolvent, that money never went out. Blockchains enable you to go out and do both the legs in the same site, which is like when you're buying a product, you get the delivery of the product and the payment in the same leg. However, the way the current CBDCs are, so you have to go out and create a bifurcation between CBDCs, which is a payment mechanism, and the asset that essentially is getting created. The current system is basically based on a closed blockchain server, where the asset creation also needs approval, and the asset creation is right now only happening if you are a bank. So you have a payment mechanism, but for that payment mechanism, you have to create demand. That demand doesn't exist because banks need to create assets also. And banks are not in a business of creating assets. They are in the business of distributing assets. So that is where I think the challenge is coming in. Right now, the current CBDC structure is like trying to go out and be the asset, be the payment mechanism, be the blockchain. They want to be everything. And that is where the adoption is getting like a big, massive problem.
Sure. I think Shonak can start this. So do you see CBDC complement or compete with crypto, and can they coexist?
So in a utopian world, when we envisioned what CBDCs are supposed to be, CBDCs were supposed to be tokens that are programmable, very similar to how cryptocurrencies operate. Why this was envisioned was because nobody knows. But the idea is, if you give people a 500 rupee note that has an API function, I'm sure there are some kids sitting in some basement somewhere who can build an extremely useful use case around it that we here cannot think about right now, that we just can't even foresee. That is what they wanted to enable. But at the current stage, CBDCs aren't really capable of doing anything at all. But I see an evolution coming in where it will be coexisting with cryptocurrencies in such a way where there's some kind of level of interoperability, where CBDCs exist within the RBI's system, but at the same time are able to interact with this whole cryptocurrency landscape. And it'll be able to interact with this whole wide range of products of DeFi and like Deepin and several other sectors. I believe the same sectors will also be built inside the RBI's jurisdiction, but this will probably take quite some time. I foresee that it's probably going to be some sandbox use case where it moves into the crypto side. And as we learn more upon from that side, it's going to start transcending into this side. But I do see that happening pretty soon.
So, to me, it is like they both will continue to coexist. It is because on one side we have CBDCs, which is controlled by the central bank, which usually have its jurisdiction of the country on one side. But on the other side, with how on the internet you can move the information across the borders without any kind of issues. It usually will be similar when it comes to money as well over a period of time. So the borders has to dissolve one at a time. So, but however, on the other side, CBDCs cannot become global as well. So there is a huge gap of like how one can do the payment if the recipient is in another countries, and that is when you need something like crypto, which is decentralized in nature, so you don't have anyone authority over it, and it is just like accepted globally. But on the other side, if you have an authority over it, then where the authority sits and which is their jurisdiction, and if there is an issue, how do you get resolved? All of those things come, and these are not even applicable for crypto. So I think there will be a good bridge between the conversions of how the CBDCs and the crypto would work, and the both should coexist in the long term.
Yeah, I think I have a similar view. Both will coexist. Like there is no saying that okay, CBDCs will die or like cryptos will die. Both of them have their own use cases, and I think there are some of those use cases that are being pushed where like MasterCard having a multi-network token, where essentially they are saying, okay, even if you're a stable coin, that can be accepted, but even if you are a CBDC, that can still be accepted. So those things are getting created. The challenge is it's going to be tough because like I think already said, like it's difficult to kind of go out and have an infrastructure which essentially is built by multiple parties where the trust among each other is like very less, because unlike like other payment mechanisms, the way today it is looked as, like when you talk about CBDCs, governments say they are the best. When you talk about cryptocurrencies, they say they are not. And like if you have to pair them together to kind of create a cross-border payment mechanism, it's really difficult. I think BIS also under Project Agora, like they're just doing a pilot between 22 banks globally. So Project Agora is also kind of something similar, where they're trying to go out and see whether the CBDCs across different banks, different currencies can work out, but all these are like pilots right now.
Sure. And many central banks are exploring the use of blockchain also for CBDC. So what are the benefits and challenges of using blockchain?
I mean, the benefits are, I don't think like anywhere in the world there is anything which is not happening through distributed ledgers. So technically Chinese yuan is also distributed ledgers. Indian CBDC is also a distributed ledger which is being built on a private blockchain itself. So most of the current countries essentially are taking the infrastructure and they are building a version of their own blockchain, the way they look at it, how their country is scaled and how it can be scaled within the constituencies to use it. However, I've not seen still a CBDC which kind of goes out and gets created on a public blockchain. And because that is scary. Like I'll give you an example right now. Like one of the infrastructure provider as a wallet, like 4 or 5 days back, had which is called a safe. Like there was a hack in Bybit, which essentially was because there was some modification on the front end of a safe. And I personally have been without like money for the last 5 days because my safe doesn't work. So imagine a whole country going down because the public infrastructure from a public blockchain perspective did not work out. So I think they both will always remain in their own purview. Like blockchains, though used, would always be in semi-private or private state for CBDCs, and stable coins, on the other hand, would be on public blockchains.
Yeah, Sadhvik. Yeah.
Just to add to that point, to the last point, there's also when the utopian idea of CBDC was sold, it was supposed to be online and offline CBDCs. That means it's supposed to work without power, without mobile network, without internet. But we're very, very far away from that.
Anyone? You? Any thoughts? Okay. So, any questions we have from the audience? Okay. If we don't have, then I would ask one more. So, as we see the adoption rate, the rate is very slow here. So, can anything be done really to push up the adoption rate, and by when realistically do we see a full-scale adoption?
I think so. There are two things happening right now. One, the whole CBDC infrastructure of India is getting overhauled. So there is a new system that is coming in, which is being rolled out. Probably with the hope that that essentially would increase consumption. But from my side, the only way CBDC scales in India is if the asset creation is given out of the banking system to the people where assets exist. Like, we need to go into the places because like government has something called PCBDC, which is programmable CBDC. But right now the use cases that are getting created. So government is like the challenge is everything cannot happen from the government side. You need to allow businesses, you need to allow a lot of other people to actually be able to build on top of it, to be able to go out and scale it.
See, I think the way we have the CBDC in India is kind of probably may not even work in the long term. So it is more supposed to be like the cash, right? So it's supposed to work offline, yes, supposed to work online as well, with or without internet, with or without mobile phone, etc. So now the way it is getting structured with more and more internal issues and compliances it is just making it so complex where people are not bothered to be, what is that I'm trying to achieve by getting into it. So people definitely have a good reason why someone should opt in for UPI to send and receive money, but why would someone do it when it comes to CBDC, and what is the advantage that they're able to get when UPI itself is interoperable across all the banks already. So, and if the app is given or if the guarantee is given either by the bank or by the central bank itself, people actually are not bothered. And when we are talking about adoption, we are actually talking about like 95% of the people, right? So, who really care about how much money transaction they want to do in cash or how much they want to do in account. It is like one and the same thing. I think for this to really work, it is supposed to exist like how the cash works, right? So for a person to receive the cash, he did not register himself as a account holder in with RBI or any banks. It's cash, it just works, right? And it is supposed to work without the KYCs as well. And it is fine if, as like how the rules exist for cash already. If you're doing more than 20,000 rupees, you should do in bank account. And if it is more than 2 lakh, you need to hold the PAN card. So such kind of rules can also exist for CBDCs. If cash is everywhere, CBDCs can,
Sure.
kind of do that as well. And then maybe people start seeing, okay, instead of doing this particular transaction in cash, I can exactly do the same thing online. And I don't need to be physically meeting the person and use the physical medium of cash to be transferred. I think probably that is one thing I see where people may see and understand, okay, this is a little bit better than the present system. If whatever you are giving is not better than what they already have, I don't see why they would even think about it or like bother about adopting it.
Right. Shonak, last thoughts?
So this particular question was actually raised at World Economic Forum in Davos. And the leaders of CBDC from all over the world were sitting on that panel, and the answer to that question was, it's unclear why you should use it. There is no current USP to CBDCs overall in the world. There is no unique value proposition, selling point where I can like get you to use it.
Absolutely.
But as it evolves and it has more functionality, it will become one of the modes of payments that we'll have. I can never give you a reason why you should use UPI or NEFT or go do a promissory note, demand draft, check. I don't know why you would use any of the last three, but people do. Similarly, you'll have all these kind of payment mechanisms, Visa, MasterCard, Amex, everything. There's no real way of distinguishing why you should use it. It's on an individual basis why they should use it. But at its current form, nobody in the world knows why you should use it.
All right. So on that wonderful note, thank you so much for the brilliant insights.